Hey guys, welcome back to another episode. In this video we will be going through our volume candlestick analysis in depth and how we use it in combination with price action. Learning how to identify volume trends is exciting, especially if you are patient and devoted to be a full-time trader. With practice, it can give a trader or investor a huge advantage. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Candlestick charting is one of the most effective ways of interpreting prices and emotions of other traders when trading the market. Knowing how to analyze candlestick charts can help a trader to determine whether a trade is likely to be profitable or not. Candlestick charting primarily highlights price movements of a currency, derivative, or security over time. This style of charting is mostly used in combination with volume bar charts for technical analysis of the market. As part of this video, we are going to discuss the following 4 important pointers in detail which are related to volume candlestick and trading. First, what is a candlestick? Second, volume of trade. Third, the 6 principles for analyzing volume and candlestick. Fourth, trading candlestick with volume confirmation. And now, what is a candlestick? The candlesticks are the reflections of what buyers and sellers are doing, what extent they move the price, and the strength behind the move. Candles tell you who is in control, but do not tell you about the strength of buyer or sellers behind the move. Candle with volume shows that. The open price tells us where the balance between buyers and sellers at the opening of that period. The opening value is the first trade of the day. After the traders have time to review the markets overnight, the open represents the desired position of investors to begin the day. The change from the previous close to the open is a reflection of new sentiments. Also, institutions looking to accumulate or distribute a position often place orders at the open because the open trade is often the largest, most liquid trade of the day. In this way, the open might be one of the best times to accumulate or distribute a large volume of asset while minimizing the impact on the asset's price. The high is the highest point the asset traded during the session. The high is the furthest point the bulls were able to push the asset higher before sellers regained control to push the asset back down. The high represents a stronghold for sellers and a resistance area to buyers. There is one exception: when the asset closes on the high, it did not encounter any real resistance from the sellers. The buyers just ran out of time. The low is the lowest point the stocks, bonds, options contracts, futures contracts, and all types of commodities traded during the session. The low is the furthest point the bears were able to force down the price before buyers regained control to push the price up. The low represents an area where enough demand existed to prevent the price from moving lower. The exception is when the price closes on the low. When the price closes on the low, it did not encounter buying support. Rather, the bulls were saved by the closing bell of the session. The close price tells us where the balance point was at the end of the period. The close is the last price agreed between buyers and sellers ending the trading session. The close is the market's final evaluation. A lot can happen between one close to the next close. The close represents investors' sentiments and convictions of investors at the end of the day. It is the position investors desire to hold after hours when investors are unable to trade with liquidity until the next session opens. The closing price is the first and oftentimes the only price the majority of investors desire to know. The change is the difference between close to close. The difference in the closing value one day versus the closing value the next day. When this difference is positive, it tells us that demand is outweighing supply. When this difference is negative, it tells us that supply is increasing beyond demand. The change is perhaps the most sought-after piece of financial data on the planet. The range is the spread of values within which the security traded throughout the day. The range spans between the bar's highest point and the same bar's lowest point. It is measured from the top of the bar, where resistance set into low, where support came in. The size of the range gives us important information about how easily demand can move the price up or supply force the price down. The wider the range, typically, the easier it is for the forces of supply and demand to move the price. And now, what is volume of trade? Volume of trade is the total quantity of shares or contracts traded for a specified security. It can be measured on any type of security traded during a trading day. Volume of trade or trade volume is measured on stocks, bonds, options contracts, futures contracts, and all types of commodities. How to use volume to improve your trading. In order to analyze volume and ensure successful trading, there are 5 terms you need to familiarize yourself with. They include: first, high volume up. This translates to more trading is currently in play at the ask, which means buyers are aggressive, and as a result, it helps to identify trend changes, continuations and turns. Second, high volume down. This simply means that more trades are being made and sellers are aggressive. Third, low volume. Simply means that the quantity available is lower than the average daily quantity. Fourth, confused volume. In day trading, it refers to an algorithm which helps to identify places where ask, bid and downside are happening. Confused volume is an important indicator which helps to show changes occurring to trends. Fifth, normal volume. In this situation, the quantity of shares or trades is at an equilibrium, so traders don't have any advantage or edge. In technical analysis, volume is an important indicator that aids traders in confirming trends and chart patterns. It is a common practice among traders to spend time monitoring bar charts and in particular, price movement. When price movement moves up or down with relatively high volume, then this situation is viewed as strong. This means that if you are monitoring a large price movement, it is wise to check on volume and monitor to see it has the same changes. Volume is also used to confirm price action patterns, for example pin bar, engulfing, double top and bottom, flags, head and shoulders. Among these patterns, there are focal points that hold important information vital to day traders. This simply means that if volume is not present to help identify the patterns as well as the focal points, the signal generated will be weak. Lastly, price is known to precede volume, and if closely monitored, it helps one form ideas regarding trend reversals. Case in point, if there is a decrease in the uptrend, this helps to show that the uptrend is about to end. 6. Principle for candlestick volume analysis in trading. Principle number 1. The length of any wick, either to the top or bottom of the candle, is always the first point of focus because it instantly shows strength, weakness, and indecision, and most important, where smart money enter. Principle number 2. If no wick is created, then this signals strong market sentiment in the direction of the closing price. Smart money active there. Principle number 3. A wide body represents strong market sentiment and a narrow body present weak market sentiment. Narrow body with the heavy volume, either smart money observing for continuous of move or smart money enter on the opposite direction. Principle number 4. A candle of the same type will have a completely different meaning depending on where it appears in a price trend. Start of trend, or middle of the trend, or end of the trend, or its support or resistance, or in the consolidation phase. Candlestick should analyze the context of the move. You should never try and read the market looking at one day's action in isolation. Always read the market phase by phase, and then read the latest day's action into the phase. Principle number 5. Volume validates price. First, see what candlestick is telling, then validated by volume. Is it validating or not with the candlestick price action? Principle number 6. When a particular time frame don't make sense, then move to the next higher time frame for the big picture or lower time frame for the microstructure of move. Trading candlestick with volume confirmation. This course material is rather complicated. Please follow the steps in this section carefully. I like to point out that traders should consider price and volume. volume to identify interest level of institutional buyers and price to identify the direction of the market. You can use any time frame, but consider that amount of noise on lower time frames. Consider using 5-minute charts and above. Let's take a look at this daily candlesticks pattern. Bullish pattern. This is nothing but when current candle close is above the previous bullish candle close. This is bullish pattern because the current candle close is above the previous bullish candle close. This is not bullish pattern because the current candle close is below the previous candle close. This is called inside bar. Bearish pattern. When current close is below the previous bearish candle close. This is bearish pattern because the current candle close is below the previous bearish candle close. This is not bearish pattern because the current candle close is above the previous candle close. With the proper understanding of candlestick, you can predict what about to happen in the near future. Professional tips. First, we can't move the market, but every candle shows what smart money trying to shows. So their move trap or genuine is only validated by volume. Second, candlestick shows half information, another half information shows by volume. Here is the example. What is telling us? Bullish pattern. 2 consecutive higher close candle. And now, let's add volume bar to this candle. Second candlestick range smaller than first candlestick range. The volume bars are red. Second volume bar greater than first volume bar. Think why the second volume bar is greater than the first one. Let me explain to you. Narrow spread candle with high volume. There are 2 possible explanations. If the volume has represented buying, how can the spread be narrow? First, either the institutional money is selling into the buying, possible reversal on near future. Second, there is a trading range to the left, and the institutional money is prepared to absorb the selling from traders locked into this old trading range. I mean breakout may happen. Let's go to the third candle. Scenario number 1. First, the volume bar is red. Second, the candle is down, closing below the second candle body. This confirms the institutional selling or valid sell signal. Scenario number 2. First, the volume bar is green. Second, the candle is down, closing at the top or middle. It shows that smart money testing supply and no more supply available. The third candle was buyer's volume if the fourth candle closes above the top of the second candle. This confirms the valid buy signal. Here are other examples of volume candlestick trading strategy. Final thoughts. Volume is an important measure that can be used to identify as well as assess market strength and weakness. Together with various indicators, it allows day traders to come up with sound entry and exit strategies by looking at price action with the primary goal of capitalizing on trends. Learning how to identify volume trends is exciting, especially if you are patient and devoted to be a full-time trader. With practice, it can give a trader or investor a huge advantage. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.